The world's financial markets have been painted a vibrant shade of green thanks to the Federal Reserve's decision to cut interest rates by an aggressive 50 basis points. If you wish to know more about the Fed slashing interest rates, you can watch our yesterday's DITM where we've covered all about the Fed's action, the impact on India and what it means for us. So anyway, this rate reduction has sent shockwaves of positivity throughout global markets, propelling stocks to a new heights. The American markets, followed by European, Asian and Pacific markets, are all in green, making us cheerful and happy. Okay, now moving on to some significant news concerning India. In a significant development that underscores India's ongoing economic prowess, the country has, for the first time ever, surpassed China in the MSCI AC World Investable Market Index. In context, this index captures large cap, mid cap and small cap representation across 23 developed markets and 24 emerging market countries. If you see the image on the screen, Indian stocks now hold a weight of 2.35% compared to China's 2.24%. With India in the 6th spot, the US tops the list with an index weight of 63%. And that's not it. On 4th September, a few weeks ago, India had also overtaken China in another key global equity benchmark, which is the MSCI Emerging Market Investable Market Index for the first time. This index tracks large cap, mid cap and small cap representation across 24 emerging market countries. Now, as you can see, the Indian equities together carry a weight of 22.27 in the index, edging ahead of Chinese stocks, whose combined weight now has fallen to 21.58%. If you're wondering how India has leaped over China, it's due to the fact that Indian equities have experienced a remarkable bull run which has helped it surpass China in the MSCI AS World IMI Index. If you see the image on the screen, the MSCI India Index has gained over 23% this year compared to the mere 0.3% in the MSCI China Index. In fact, it has delivered the best returns compared to the MSCI World and EM Index as well. This outperformance has led to more Indian companies being added to both the MSCI EM and MSCI IMI indices, while the weight of underperforming Chinese stocks has been reduced. This landmark achievement marks a pivotal moment as India's journey towards becoming a global economic powerhouse. Interestingly, Morgan Stanley has decided to remain overweight on India while reiterating its underweight call on China in the Pan-Asia EM asset allocation. But a point to highlight is that the most widely followed index by global investors is the MSCI Emerging Market Index. India stands second with a weight of 19.9%, while China is marginally ahead with 24.42% as of August 2024. Now to conclude, while China has struggled with economic headwinds and regulatory crackdowns, India's markets have benefited from favorable macroeconomic conditions. India is expected to continue to gain share due to market outperformance, new issuance and liquidity improvements. Even S&P Global have projected India to become the third largest economy by fiscal year 2031 on the back of strong macroeconomic conditions. Moreover, India's rising weightage in the MSCI indexes will bring additional inflows. Additionally, with the Fed cutting interest rates aggressively and India being an emerging economy will be one of the biggest beneficiaries for foreign inflows. One of the highlights also is India has been the best performing market this year globally, with its benchmark indices Nifty and Sensex up by 18% and 16% respectively. All in all, this achievement underscores India's growing economic strength and its potential to becoming a major player on the global stage. With that, this is me, Rahul signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.